Hi, Steve Rhodes here with TFNN. I wanted to take a moment before you get into your weekend and let you know exactly what the markets are doing. I was fortunate enough to meet Steve Jobs back in 1984. I was in the computer industry. And what always stuck with me was not really how he's touched our lives with things like iPhones, iPods, and things of that sort, but really his life philosophy, and it's a great way to live, which was basically each day he woke up and he looked in the mirror and he said, hey, if today were the last day of my life, what I want to do, what I'm about to do today. Each day at TFNN, if you listen to my shows from 9 to 11, I absolutely am doing exactly what I want to do. None more so than when I do my workshops where I'm really able to touch people's lives. So if you are interested in the different patterns, let me show you some of the patterns. Let me show you actually what's going on in the market by utilizing those patterns. I'm going to look at the S&P futures. We typically look at the S&P cash out here. I want to show you the S&P futures because they formed a little bit different candle formation, and they're really important. Now, if we take a look at the A to B equals CD pattern, the lightning bolt pattern out here, what I want you to know is that there was an A point that was formed on September 19th. Market retraces into October 2nd, makes a very shallow retracement up here into October 6th, forms a 1 to 1.618 A to B equals CD. Believe it or not, there's an art to helping you understand when the market is going to make more than a 1-to-1 A to B equals CD pattern and when it has reversed on you. Now, in the case of the ES mini, as it was down here, I'll just remove this pattern here right now. When it got down there, it actually formed what's referred to as a morning star candle. That's this 3-candle formation here. Sometimes it's 3, 4, 5 candles that forms. This actually set up the C point of a new A to B equals CD to the upside. If we take a look at that and you want to understand where the S&P futures are eventually headed to, your A point is going to be down here on February 3rd. Your B point is going to be the September 19th, and it's going to be the low of October the 15th that marks your C point. You see how this comes in here at a 1-to-1 A to B equals CD at the 2115 level? Price is going to go higher. Either 2197 or 2302 is really on its mark. Now, the question you might have is, hey, why did price stop where it was today? Real easy answer to that. When price makes moves in expansions, typically there's a 1.272 or 1.6 expansion of a set of swing points. Well, we just took a look at the major set of swing points, the 19th of September, the October 6th low. Take a look at that price projection, 2069. Price stop there. It's a natural area of resistance. It's also a place where you see fear and greed. Sellers say, aha, I'm going to jump on board. Buyers say, I'm going to go ahead and lighten up the load here. Now, that was the daily time frame that we're looking at. Take a look at the pattern here on the 120-minute time frame chart. Remember we talked about a morning star pattern? Here's an evening star pattern. So the same pattern that we saw at the lows of October 16th, again, this is a 120-minute time frame chart, now has occurred up here at this level. What else do we have up at that level? We've got an A to B equals CD pattern. Your A point is right down here on November 16th. That's your A point, your B point up here, your C point right there. Look at that. Voila. A 1 to 1.272 A to B equals CD. The market has reached a natural area on the daily, on the intraday chart out here. Wouldn't surprise me to even see the market pull back a little bit more. Maybe it's going to go ahead and run higher, but it's reached a natural level of where fear and greed exist. Let me show you something else. Now, the market's going to make those moves up into the highs, but there are some warning signals that you've got to be aware of. For example, if we take a look at the correlation between the S&P futures and the VIX index, which is the bottom of the screen, what you'll notice here, or what you should notice, is that the VIX is actually making higher lows right now. See this higher lows right out here? That's an unusual pattern. We'll take a look at the higher highs going on inside the S&P futures. Typically, markets rise when the VIX is making lower lows out here. We don't have that at the moment, and that's a little bit of a warning shot. Take a look at the VIX index, in essence, from all the way back here to right here. We've got a rising bottom pattern. Take a look at the S&P futures from the same thing. We had a rising tops form out here. That led to a major correction. That is not what I expect this time, for a number of reasons. I'm not going to go ahead and get it, but this pattern is prevalent everywhere. If we take a look at for example, the S&P as was making a similar shallow rising highs out here, and the VIX index making higher lows, you see, this is a pattern to pay attention to. That says we actually could get some type of further retracement next week before the markets really take off topside for the rest of the year. There's another element here that you've got to be focused on. That is the euro, Japanese yen. You don't need to trade the currency pairs, but you must know what's going on because this currency pair tracks the U.S. stock market better than any other currency pair. When this currency pair diverges from the market, as it did back here. This is the S&P futures. If we take a look at from this point in, let me get the actual tool out here. That would be helpful. If we take a look at the S&P, and it can diverge for a long period of time. But if we take a look at the Euro Japanese yen from here to about here, you can see how it was headed lower versus the S&P futures were headed higher. Eventually, that led to a retracement, a correction. The same pattern was going on up here at the highs as well. What we can see here right now, this is what we want to focus on. The Euro-Japanese yen has pulled back substantially. It is another reason why we've seen a bit of a pullback after the 1.272 expansion on the daily, after we saw the 1 to 1.272 A to B equals CD on the 120-minute time frame chart. These are all just natural, normal patterns. The market is going to move higher. If you want to be able to master these patterns, and I would love to be able to share this with you, because if there's anything I'm passionate about, it's being able to pass along this knowledge and this information. So if you, and look, we're coming into the holidays, maybe you can't be there, all kinds of, don't worry, this is going to be archived on your members page. It's a 7-week course. What that really means is you have access to me by phone, by Skype, by email, because I want you to understand these patterns. I'm going to show you how to use them. I'm going to show you the tricks. I'm going to be able to, in essence, condense 10,000 hours into a first 3-week course. That's going to be tomorrow morning from 9 to 12. Back on January 9th, we'll reconvene as well. That's on a Friday, 7 weeks in between, and any other time that you need in order to be able to understand these patterns. So all the details are on the email that you have that you're taking a look at. If you're even on the fence, trust me, this is something you want to do. Look, we're coming to the holidays. I know what it's like. You want to save money for gifts. People are going to buy something for you. Give them the gift of your knowledge, your education, because you're able to then pass that on to them. So go ahead, just pass them some cards at the dinner table on Thanksgiving. By the way, if we don't speak to each other before Thanksgiving, please have a safe and happy holiday. But there is no better gift than the gift of education, because you can pass that along to all your loved ones as well. So thanks for being here. Have a great weekend, a great Thanksgiving. I look forward to seeing you soon. Take care now.